What is up, guys? This is Scott with Never Hedge coming at you with another stock update for GME for Friday, April 2nd, 2021. Today, the markets were closed for Good Friday, but that's fine. We are currently sitting at $191.45. Pretty flat week this week. Opened down a little bit, and then we've been sitting right around that 190 range for pretty much the whole week. Not a ton of movement, but I found a couple of interesting articles and threads that I thought I would share with you guys so you don't have to look it up yourself. So the first one from Investor Place is the case for GameStop hitting $1,000 this year. And basically they go into, why meme stocks are actually a good idea to invest in. And this guy is giving his synopsis of why he thinks that it will indeed hit 1,000 per share pretty soon, according to him. Whether or not you think it'll go higher than that, I couldn't tell you. So he then goes on to say, the rise of meme stocks is something that I think hit Wall Street by surprise. Indeed, GameStop's surge is going to be taught in business school classrooms for decades. I remember hearing professionals ramble on about short squeezes, thinking this is all theoretical and so rare it's not even applicable. Boy, how the times have changed. GME stocks surged as retail investor momentum has pushed short sellers to cover their bets. A high short percentage combined with a flurry of retail investors buying in tandem did indeed appear to lead to a short squeeze in late January. Some believe there's another elusive squeeze out there on the horizon. GME's moves in the recent days pay tribute to this. Thus, there's those who are calling for a GME stock price well in excess of $1,000 per share. I believe that's totally within the realm of possibility today. Fundamentals are no longer matter with this stock. Hysteria has taken over, and I agree 100%. He then goes on to say there is a key risk. GameStop could issue shares, a lot of it. There's a bunch of speculation as to why GameStop hasn't issued shares thus far. Indeed, the recent spikes in the last few months have seemed to have provided great opportunities to do so. However, it appears that there's now an indication that there could indeed be something coming on the horizon. Here's an excerpt directly from the company's 10K. Since January 2021, we have been evaluating whether to increase the size of the ATM program and whether to potentially sell shares of our Class A common stock under the increased ATM program during the course of the fiscal 2021, primarily to fund the acceleration of our future transformation initiatives and general working capital needs. The timing and amount of sales under the ATM program would depend on, among other factors, our capital needs and alternative sources and costs of capital available to us, market perceptions about us, and the current trading price of our Class A common stock. In other words, the company is not ruling out an equity issuance or two down the road. That shouldn't be a surprise to anyone. So in conclusion, this guy says, GameStop right now is the headline meme stock that isn't likely to change for some time. Those on Wall Street bets chasing after those tendies and holding on with diamond hands may well be rewarded with GameStop stock valued at $1,000 or much more. Perhaps such a move will happen in short order. Anything is possible these days. Retail investors have found that when synchronized, their individual purchases add up to market swinging moves. My hat's off to those still holding on with diamond hands. I personally think that the fact that investing has gone mainstream and young investors are discussing investing on social media is a great thing. If anything, this should be encouraged. My hope is that when these short squeeze hopes eventually fizzle, and that's how I believe it will happen, these investors don't leave the investing world forever. That said, I'm short GameStop right now via various long-dated put options. While acknowledging that this stock can indeed go to $1,000 in short order, I also believe that GME is completely detached from its fundamentals. It's going to drop back down to earth. I have no idea when, but it will. Those moonshot bets have paid off, but my advice to those with diamond hands is take a little off the table. Don't leave empty-handed. Also, F this guy. Don't sell, diamond hands, tendies. On to the next. Okay, so I found this Twitter thread. I cannot verify whether it is legit or not, or whether it's a true story, but it's certainly true that it is a story, and we're going to talk about it a little bit. So this guy, Carlos Trades, did a huge DD thread on GME and AMC, and he's posting some stuff from, I believe it's from the SEC filings, and it's pretty sketchy. It talks about what some of the hedge funds are doing. That's kind of driving the price down, where they're trading shares back and forth to each other to lower the price down and kind of squeeze people out who have stop losses on there. So basically, Carlos Trades, hats off to him. Go give him a follow. I've never heard of this guy before about an hour ago, so hopefully he sees this and doesn't get mad at me for using this. So what he found is on GME subreddits and as well as doing his own DD is this bit right here. NASDAQ market makers and ECNs that are NASD members will be able to display their quotes and orders anonymously at these price levels in the NASDAQ order display facility, which should encourage the display of greater trading interest. He found a huge piece of evidence, 1999 SEC filing, that indicates the SEC themselves was the one who allowed hedge funds to trade with each other, quotes for certain stock orders to allow for better trading interest. This is another crucial part of the puzzle, as it gives precedent to the SEC empowering hedge funds to look and form a symbiotic relationship with each other to share information about orders anonymously. This explains the naked shares on AMC and GME. This 1999 SEC filing explains why it's so hard to catch them. They are trading information that is not public and have no reason to share it even with regulators. We theorized on this, but this is proof of power granted by the SEC to hedge funds to literally collude with each other. This is huge. This is a huge finding. I'm currently in talks with some well-known folks who have exposed a ton of stuff, and even they are baffled by this. I was waiting for some corroboration on this, and I got it. I freaking found the missing link. After all those 4 a.m. sleepless nights, people, send this flying, folks. So let's go but basically what he's saying is pretty fucked up, because the hedge funds, the SEC is allowing hedge funds to collude with each other to, drive the price down, trigger stop losses, and screw the little guys like you and me. So I think that's all I found on this for today, April 2nd, and let's send this shit to the moon, guys.